So welcome back to FOCAS Study, where we cover important chapters and also all the case scenarios from your institute's case scenario booklet. So this is video number 2 for financial management case scenarios. So let us, we completed 5 case scenarios in the previous class, previous video rather. Now we will start with case scenario number 6. MNP Limited is a multinational company having its operations spread mostly in India and neighborhood countries. The promoter of the company believed that the capital sector of the company must be kept flexible and balanced, where proper mix should always be maintained between debt and equity. Such mix should be reviewed from time to time, keeping in mind the changing situation of India and global scenario. The current capital structure is as under: 9% debentures 2,75,000, 11% preference shares 2,25,000, equity shares 5 lakhs. Total capital is 10 lakhs. Following are some of the additional information provided by MNP Limited related to the above mentioned capital structure. Rupees 100 per debenture redeemable at par has 2% flotation cost and 10 years of maturity. Market price is 105. 100 per preference shares redeemable at par has 3% flotation cost and 10 years of maturity. Market price is 106. The equity share has a flotation cost of 4 rupees and market price is rupees 24. The next year expected dividend is 2% with an annual growth of 5%. The firm has a practice of paying all earnings in the form of dividend. Corporate tax rate is 35. Since the company is a multinational company, market value weights are preferred over book value weights while calculating weighted average cost for several reasons. The company believes that market values reflect the current market perception of the company's financial health. This is more relevant for calculating cost of capital today. Book values based on historical accounting policies may not accurately represent the true economic value of the company's capital components. Market value, all low to low square they have given you. On the basis of the information, you are required to answer the following MCQs. Calculate cost of equity and choose the correct answer on the following: cost of debt, cost of preference shares, weighted average cost of capital using market value weights. What will be the current market price of MNP Limited shares if KE is 10%, expected dividend is 2, and growth is 5%? Yes, very simple. Cost of equity. First question, cost of equity கேட்டிருக்காங்க. என்ன formula? D1 by P0 plus G. So D1 is 2 rupees. P0 is 24 minus 4 plus G is 5%. So 2 by 20 is 10 plus 5 is 15%. So cost of equity is 15%. Cost of debt the next. Cost of debt is equal to interest is 9% into 1 minus tax rate is 0.35 plus my redemption value is 100. Net proceeds is 102.9. எப்படி சார் net proceeds is 102.9 சொல்றேன். Yes, so market price is 105. Yes or no? 105 ல 2% flotation cost. So 105 minus 2% அப்படின்னு போட்டீங்கன்னா எவ்வளவு வருது? 102.9 வருது. So that will be my net proceeds divided by number of years is 10. The whole divided by 100 plus 102.9 divided by 2. So give you 5.48%. Next, similar calculation. KP is equal to preference dividend is 11 rupees. The redemption value is 100. Net proceeds எவ்வளவு வரும்? Market price is 106 and 3% flotation cost. So what you have to put? 106 minus 3% gives you 102.82. The whole divided by 10 years. This divided by 100 plus 102.82 divided by 2. This gives you an answer of 10.57% as cost of preference shares. Weighted average cost of capital is very simple. எப்படி calculate பண்ணணும்? 105 per debenture, 106 per preference share, 24 per equity share வச்சு calculate பண்ணி weight calculate பண்ணிட்டு you have the individual costs KE, KD and KP. அதால multiply பண்ணா weighted average cost of capital comes up to 12.8%. Next, current market price. உங்களோட KE க்கு என்ன formula? T1 by P0 plus G. This can be rewritten as P0 நான் என்ன பண்ணிடுறேன்? So KE minus G is equal to D1 by P0. P0 இந்த சைடு கொண்டு போயிடுறேன். P0 is equal to D1 by KE minus G. So P0 is equal to D1 is 2 rupees. KE is how much? 10% னு questionல கொடுத்துட்டாங்க. Growth is 5%. So 2 by 5% gives me an answer of 40 rupees per share as the market value. With this, case scenario 6 is over. Now let us go to case scenario 7. Armor LLP is a newly established startup dealing in manufacture of a revolutionary product, HDHMR, which is a substitute to conventional wood and plywood. It is an economical substitute for manufacture of furniture and home furnishing. It has been asked by venture capitalists for an estimated amount of funds required for setting up a plant and circulating capital required. Circulating capital and working capital. Consultant hired by the entity has advised the cost of setting up the plant would be 5 crores and it will require 1 year to make the plant operational. Anticipated revenue and associated cost numbers are as follows. Units to be sold 3 lakh square meters per annum. Sale price for each square meter is 1000. So my annual sales is equal to, I'll sell 3 lakh square meters. Each square meter is 1000 rupees. So it will be 3 lakh into 1000. So my annual sales will be 30 CR, 30 crores. Raw material cost is 200 per square meter. So 3 lakhs into 200. This will give me 6 crore rupees. Labor cost 50 per hour. Labor hours per square meter is 3 hours. So 3 lakh square meters kevlo hours. 3 lakh into 3 into 50. So that will give me 4.5 CR. Right? Cash manufacturing overheads. This will be 3 lakhs into 75 per machine hour னு கொடுத்திருக்காங்க. எவ்வளவு machine hours ஒரு square meter க்கு 2 machine hours. So 3 lakhs into 2 into 75. This will be another 4.5 crores. Selling and administration overheads 250 per square meter. So 3 lakhs into 250. That will be 7.5 crores. Buying a new product in the industry, the firm will have to give a longer credit period of 3 months to its customers. It will maintain a stock of 15% of annual consumption. Based on negotiation with the creditors, the payment period has been agreed to be 1 month from the date of purchase. The entity will hold finished goods equal to the 2 months of units to be sold. All other expenses are to be paid in 1 month arrears. Cash and bank balance to the tune of 25 lakhs is to be maintained always. The entity is also considering reducing the working capital requirement by reducing the credit period to customers by a month, which will lead to reduction of sales by 5%. Engaging with a factor for managing the receivables who will charge a commission of 2% of invoice value and advance 65% of receivables at 12% per annum. This will lead to savings and administration and bad debts to the extent of 20 lakhs and 16 lakhs respectively. The entity is also considering funding a part of working capital by bank loan. For this purpose, the bank has stipulated that it will grant 75% of current assets as advance against working capital at an interest rate of 16.5% with the condition of opening a current account with it, which will require 10% of the loan to be a minimum average balance. Profit before tax, simple, you already have all the numbers. 30 crores minus 6 crores minus 4.5 crores minus 4.5 crores minus 7.5 crores. So answer should be A, 750 lakhs. Already the number போட்டு வச்சிட்டோம். Estimated current assets requirement in the first year of operation. This is what we have to calculate. So stock of raw materials எவ்வளவு கொடுத்துட்டாங்க? Raw material stock எவ்வளவு வச்சிருப்பாங்களா? 15% of annual consumption. Annual consumption எவ்வளவு? 6 crores. So 6 crores into 15%. Raw materials is 6 crores. So raw material consumption. So raw materials consumed is how much? Finished goods ல ஒரு 50000 stock இருக்கணும். ஏன் சார் क्वेश्चनல கொடுத்திருக்காங்க. So 30 lakhs into 2 by 12, 50,000 will be my closing stock. Units sold is 3 lakhs. So total raw material consumed is 3 lakh 50,000. So raw material purchase will be how much? Consumption, which is 3 crore 50 lakhs. 3 lakh 50,000 into 200 rupees, which will be 7 crores plus 1 crore 5 lakhs gives you 8 crore 5 lakhs. In the 1 crore 5 lakhs, 15% of 7 crores. 1 crore 5 lakhs. Stock of finished goods is 2 crore 50 lakhs. Debtors எவ்வளோ 3 months கழிச்சு payment பண்றாங்க. Sales is 22 crore 50. Cost of goods sold is 22 crore 50 lakhs. So 5 crore 62 lakh 50,000. Cash is 25 lakhs, which they are given you in the question. So total non-current assets, total current assets will be 9 crore 42 lakh 50,000. Third என்ன questionல கேட்டிருக்காங்க, net working capital. So I know that total current assets is 9 crore 42 lakh 50,000. Creditors are paid in 1 month, so 1 crore 50 lakhs. Outstanding expenses are paid in 1 month arrear, so that is 2 crore 17 lakh 8,333. So my net working capital will be 7 lakh 25,000, 7 crore 25 lakh 41,667. Annualized percentage of cost for two options to reduce the working capital. So first, creditors oda credit period நான் குறைச்சேன் அப்படின்னா என்ன இருக்கும்? Debtors oda current credit period is 2 months. So debtors balance will be 3 crore 56 lakh 25,000. Debtors credit period 3 months இருந்துச்சுன்னா எனக்கு என்ன வரும்? 5 crore 62 lakh 50,000. So நெட்டா எனக்கு debtors எவ்வளவு குறைவாங்க? 2 crore 6 lakh 25,000 குறைவாங்க. இதனால எனக்கு எவ்வளவு ப்ராஃபிட்ல குறையும்? 37 lakh 50,000 குறையும். So எனக்கு என்ன காஸ்ட்? 37 lakh 50,000 is my cost. My savings is 2 crore 6 lakh 25,000. So 18.18% is my cost. If I go for factoring, 2% is my commission, which will be 60 lakhs. Interest that I pay will be 30 crores into 65% தான் எனக்கு அட்வான்ஸா கொடுக்குறான். அந்த அட்வான்ஸ்ல 12% rate of interest போடுவான் for 3 months. This will be 58 lakh 50,000. I also have a savings of 20 plus 16, 36 lakhs. So நெட்டா எனக்கு என்ன காஸ்ட்? 58 plus 60 minus 36, 82 lakh 50,000 divided by 65% of 30 crores, which is my advance, 19 crore 50 lakhs into 12 by 3, 82 lakh 50,000. So percentage is 16.92%. What will be the maximum possible bank finance by the bank and annualized percentage of the cost? Annualized percentage of the same. Maximum permissible bank finance is 75% of working capital, which will be 5 crore 44 lakh 6,250. Annualized cost of the bank loan will be 10%. Anyways, நான் current accountல வச்சிருப்பேன். So my cost is 18.33%. Because அந்த 10% நான் யூஸே பண்ண முடியாது. ஏன் சார்? இந்த 10% will always be lying where? For example, let me tell you, I'm getting a 100 rupees loan. இதுல என்ன சொல்றான் அப்படின்னா, ஒரு 10 ரூபாய் லோனை எப்பவுமே உன் கரண்ட் அக்கௌண்ட்ல தான் வச்சுக்கணும். You should not use it. பாக்கி 90 rupees தான் you can use அப்படின்னு சொல்லியிருக்கான். So even though he is giving me 100 rupees loan, I am only able to use 90 rupees. அதனால தான் இங்க என்ன பண்றேன்? 16.5% is the rate of interest. But for how much value? 90% value, not 100% value. It is for 90% value. So 16.5 divided by 90 gives me 18.33%. With that, case scenario 7 is over. Let us go to case scenario 8. Mr. Ronak, a doctor by profession, has his own private hospital at Goa having specialization in cardiac treatments. However, nowadays, Goa not only being a place for tourists, is also a place for business delegates, cultural people, politicians, students, and other classes. It is opening new windows for businesses and getting recognition as an important tourist and leisure hub in Southwest India. There are a number of hotels and resorts at Goa. However, the need still exists for more hotel services, in particular with excellent service because of the large number of visitors. Mr. Ronak, although being a doctor by profession, is contemplating to establish a 5-star hotel in Goa, which will consist of 5 floors, 40 normal rooms, and 8 deluxe suites, as well as a restaurant and a couple of conference rooms with a small wedding hall on the ground floor. Following are the estimated occupancy rate. Being a 5-star hotel, breakfast would be complimentary, but lunch and dinner are on an a la carte basis. So hotel accommodation la enna vara porudhu? Normal room 40 days. It will be occupied for 33% of the days, which is 120 days. So 8,000 rupees is the average room rent. Growth rate in rent is 12%. Deluxe suites, 8 rooms are there. Same 120 days, 25,000 per day, 9% growth. Conference with wedding hall, 2 numbers, 40 days is the occupancy rate, 3 lakhs is the average rent. Once again, growth is 9%. Restaurant, all days it is getting occupied because வெளியில ஸ்டே பண்ணியிருந்தாலும் என் ரெஸ்டாரண்ட்ல மேபி அவங்க வந்து சாப்பிடலாம். ஸோ அதனால 27,000 is the average sale that I expect in one day. Growth is 8%. So for the sake of simplicity in calculation, growth rate is to be applied only once after the completion of 10 years. The estimated cost of land will be 250 million, construction cost 100 million, salvage value at the end of year 15 will be 25% of cost of construction. Cost of furniture will be 1,50,000 for normal room, 3,80,000 for deluxe suite. For the conference room and wedding hall will be 7 lakh each, and for restaurant it will be 10 lakh. In addition, the hotel will require 4 elevators at different locations, will be costing 35 lakh each. The cost of buying and installing electronic appliances like TV sets, air conditioners, fridge, etc. will be 35 million. Elevators will be depreciated at 5% per annum. Electronic appliances will have a salvage value of 15% at the end of 15 years. It will be built under the name of Harihar Infrastructure. The builder estimated the building will survive for 15 years. The required furniture will be supplied by a local reputed furniture called Veru Furnishings Limited. They ensure that the furniture will go for 10 years very smoothly. At the end of 10th year, new furniture for normal rooms and deluxe suites will be bought, and old furniture for the same room will be sold by the hotel owner. The owner of the hotel estimates that he would be able to purchase the required furniture at 15% higher than the previous purchase price. The salvage value of the furniture at the end of the 10th year will be 5% of their purchase price with no book value remaining. Furniture at restaurant, conference and wedding hall will not require any major changes as such except for minor renovation which will cost 20 lakhs in the end of 12th year. Any scrap generated on account of such renovation will be sold at 1,75,000 rupees. In order to boost the tourism industry in Goa, the state government will be granting a subsidy of 15% of the initial capex incurred. It will be paid at the time of cost incurred, an additional subsidy of 10% on annual revenue expenses for the first 3 years of operations, but will be directly credited the bank account only at the end of the 5th year and it shall be non-taxable. The annual recurring expenses will be 1 crore 80 lakhs. It includes salaries, etc., all expenses. After the end of 10 years, annual recurring expenses will increase at the rate of 10%. They decide to spend 5 lakhs per year for the purpose of training of the employees. Hotel project will be entitled to enjoy a tax holiday for the first 5 years, after which 25% corporate tax will come. Cost of equity for the company is 12% and the estimated hurdle rate by considering structure of capital is 15%. Depreciation is on SLM basis. Assume 365 days in a year. Ignore depreciation for furniture used in restaurant, wedding hall and conference. From the above, please answer the following MCQs. One of the most complex sums that can be asked, multiple numbers we have to solve. We don't have an option. Yes. So how much initial investment will be required? Cost of land and construction cost will be 350 million, which is nothing but 35 crores. Furniture cost 40 room இருக்கு, ஒரு ரூமுக்கு 1.5 லட்சம் ரூபாய், so 60 lakhs. Suite rooms 8 இருக்கு, ஒரு ரூமுக்கு 3,80,000, so 30,40,000. Conference and wedding halls, 2 halls are there, 7 lakhs each, 14 lakhs. Restaurant 10 lakhs. Elevators 4 into 35 lakh, 1 crore 40 lakhs. Electronic appliances 3 crore 50 lakhs. So gross investment will be how much? 41 crore 4 lakh 40,000. 15% will be government subsidy, which is 6 crore 15 lakh 66,000. So net initial investment that I should incur is 34.887 crores, which is your option B. Second, what is the net present value of the project? So let us calculate. Initial investment, calculate 4 crore 88 lakh 74,000. 34 crore 88 lakh 74,000, which is 100%. One will be the discounting factor. Hurdle rate 15, which is basically your discounting factor. So present value is 34,88,74. Year 10 end la na enna vaanguven, furnitures pudusa vaanguven, evlo 15% higher price la. So this plus 15%, this plus 15%. Conference hall la maatha vendaan soltaanga. So evlo vaanguven 69 and 3496.2472. I can calculate. Renovation at restaurant, conference hall, etc. 18,25,000 na renovate பண்ணுவேன் at the end of year 12, which will be 0.1869, 3,41,093. Total will be 35 crore 17,84,983. This is your cash outflow. Cash inflows enna? First 5 years ku 3 crore 84 lakhs, next 5 years ku 3 crore 84 lakhs. 10 years முடிஞ்சதுக்கு அப்புறம் there will be a growth of how much percentage? எவ்வளவு பெரிய क्वेश्चन பா. 12% growth இருக்கும். So அந்த 12% add பண்ணா 4 crore 30 lakh 8,000. Similarly எல்லாத்துக்குமே 7%, 8% என்ன growth இருக்கோ எல்லாத்தையும் add பண்ணா total sales வந்துரும். Annual recurring fixed cost excluding depreciation is 1 crore 80 lakhs. அதுவும் increase ஆகும் by 10%. Training expenses is 5 lakhs for each 5 years. For each of the years. Building 50 lakhs depreciation, elevator 7 lakhs depreciation, electronic appliances 19 lakh depreciation, furniture 8 lakhs depreciation, new furniture 10 lakhs depreciation. So net profit before tax is so much. Tax will be 0 for the first 5 years. Remaining years it will be 25%. Net profit after tax will be so much. I should add back depreciation. So how much will be my cash inflows? It will be 7 crore 76 lakh 20,000. Present value annuity factor at 15% I should calculate. So my cash inflows oda present value எவ்வளவு வரும்? இத மூணுத்தையும் ஆட் பண்ணா it will be somewhere around 42 crore 23 lakh 17,000. So my net present value is 7 crore 5 lakh 32,000. Third question என்ன கேட்டிருக்காங்க? Payback period for the initial investment. So each year எனக்கு எவ்வளவு cash inflow வருது? 7 crore 76 lakh 20,000 cash inflow வருது. நான் முதல்ல எவ்வளவு இன்வெஸ்ட் பண்ணேன்? 34 88 74. இதை நான் ஆட் பண்ணிட்டே வந்தேன்னு வச்சுக்கோயேன், எனக்கு ஃபோர்த் இயர்ல 3104 வந்துடுறது, which is less than 3484. So 4 years வரைக்கும் பேபேக் ஆகல. ஃபிஃப்த் இயர்ல எனக்கு எவ்வளவு வரும்? 7 crore 76 lakhம் வரும். அதை தவிர கவர்மெண்ட் சப்சிடின்னு எவ்வளவு கால்குலேட் பண்ணோம்? some 6 crores calculate பண்ணோம். So அதையும் ஆட் பண்ணா what will I get? I will get 39 36 50. So now what is happening? It is happening so that payback period is happening after 4 years. 4 years க்கு அப்புறம் எவ்வளவு இருக்கு? 3 crore 83 இருக்கு. ஆக்சுவலான growth எவ்வளவு? 8 crore 31. So 4.46 years is my payback period. Next, accounting profit is nothing but net profit after tax plus government subsidy on revenue expense. That will be 6 crore 90 lakh 77,861 plus 18 lakh 50,000, 7 lakh 99 crore 7 crore 9 lakh 27,867 per annum. So now next is fifth question என்ன கேட்டிருக்காங்க? IRR of the project. Net present value is how much? 7 crores. Discounting factor is 15%. So discounting factor 20% வச்சிருந்தேன்னா என்னோட net present value becomes negative 97 lakhs. So that means IRR will be 19.396%. I am using interpolation to arrive at the answer. So usually interpolation technique use பண்ணீங்கன்னா you will arrive at the answer that IRR is 19.396%. Now let us solve case scenario 9. Somewhere Limited, a leading FMCG company having its current presence in more than 150 Tier 1 and Tier 2 cities. The stores are operating in the brand name of Go Mart, competing with Reliance Fresh, Walmart, Big Bazaar, and other chains. Owing to the increase, it is planning for massive expansion and is contemplating opening 50 more shops of FMCG products. The CFO and his team estimated the funds needed for expansion is 200 lakhs per store. Such funds would be utilized for buying out a space and setting up a store and buying other required fixed assets, etc. Central government will provide a 15% subsidy on gross profit if the overall cost of capital does not exceed 10%. Apart from the above, the CFO and the team require an estimate of the additional capital needed for the smooth running of fixed assets and its daily operations. Based on market research, they have collected the other information for each store as follows. Average sales would be 120 lakhs per annum with a GP margin of 18%. Customer pay through different digital modes and channels including POS systems, debit cards and credit cards, which generally takes approx 9 days for the funds to get credited to the bank account. 15% of the customers use debit and credit cards to make the payment. Installing a POS comes with a fee of 2% for total sales made through POS. Being an FMCG outlet, inventories of multiple products needs to be kept. Different products have different storage periods. However, primarily products are classified into 3 broad categories: durable, semi-durable, and perishable. Perishable products comprise 60% of sales, whereas semi-durable is 25% and balance is durable products. Inventory storage periods for the respective products are 10, 30, and 60. Suppliers provide 30 days credit. Each store will employ 20 employees of different hierarchy, and monthly average salaries to staff is 4 lakhs per month. It is paid on first of the subsequent month. Somewhere Limited plans to keep optimum cash balance in hand as suggested by Baumal's model. The excess cash balance, if any, will be invested in marketable securities, which will generate a return at 12%. Total disbursement for the year is 1.5 lakhs per month with a transaction cost of 20 per transfer. The optimum capital structure is 2:1. Trade credit can also be used for expansion of capital needs. The cost of raising debts for each store is as per the below slabs. Up to 80 lakhs, cost of debt is 10%. Minimum rate expected by equity shareholders is 12.5. 80 ல இருந்து 150 க்கு 11.5 13.5, 150 ல இருந்து 250 க்கு 12 14, 250 க்கு மேல 13.5 15. It means up to 80 lakhs of project cost, the company can raise debt at 80% at 10% and equity at 12.5% and so on. Tax rate applicable to the corporate is 25%. Calculate the following for each of the stores based on the above details. optimum cash balance, gross and net working capital for the next year, amount of total funds needed to set up a store, overall cost of capital, and the amount of revenue subsidy given by the government. So as per William J. Baumol, same EOQ formula, root of 280 by O. So 2 into 18 lakhs is my average cash disbursement. 20 rupees is my transfer cost divided by 12% is my opportunity cost. The optimum cash balance is 25,000 rupees. Second என்ன கேட்டிருக்காங்க gross working capital and net working capital. FG inventory எவ்வளவு இருக்க போறது? COGS is 120 lakhs into 82% because 18% is my gross profit. So 98.4 lakhs. Perishable will be 98.4 lakhs. 60% will be perishable. இதுக்கு நான் 10 days inventory வச்சிட்டு இருப்பேன். So 10 by 360, 1.64 lakhs. Semi-durable 98.40 into 25% into 30 by 360, 2.05. இது எல்லாத்தையும் ஆட் பண்ணா 6.15 lakhs வரும். That is my FG inventory. Trade receivables எவ்வளவு வரும்? So total trade receivables is cost of sales is 15.12 lakhs. Number of days it gets blocked is 9 days. So 0.378 lakhs is my trade receivables. Cost of sales எப்படி calculate பண்ணேன்? COGS plus post transaction fee. So this is 0.378, which is 37,800 becomes my trade receivables. Cash balance மேல calculate பண்ணிருக்கோம். So total current assets is 677,295. So this is my gross working capital. Next trade payables எவ்வளோ? Very simple and straightforward. 48 lakhs salary, 4 lakhs per month into 12. இதை நான் எப்போ பே பண்றேன்? அடுத்த மாசம் தான் பே பண்றேன். ஸோ ஐ எம் என்ஜாயிங் 30 days கிரெடிட். ஸோ 4 lakhs இஸ் மை அவுட்ஸ்டாண்டிங் சேலரிஸ். ஸோ அது ஒரு அமௌண்ட், அதை எடுத்து போட்டுடலாம். நெக்ஸ்ட் ட்ரேட் பேயபிள்ஸ் எவ்வளோ? பர்ச்சேசஸ் இஸ் 104.55. பர்ச்சேசஸ் எவ்வளோ? COGS plus closing stock minus opening stock 98.4 plus 6.15 இப்போ தான் கால்குலேட் பண்ணியிருக்கோம். Opening stock is 0 because these are new stores. Openingல எதுவும் இருந்திருக்காது. So my purchases is 104.55 into credit given is 30 days. So my trade payables is 8,71,250. So my net working capital is a negative of 5,93,955. இதுவும் போட்டாச்சு. Third என்ன? Total capital needed. எவ்வளோ? 200 lakhs is my fixed cost that I require. Working capital minusல ஒரு amount இருக்கு. So total capital that I need is 194.0605. So 194.0605 இருக்கிறதுனால என்ன இருக்கும்? 80 lakhs வரைக்கும் எனக்கு ஒரு காஸ்ட் இருக்கும். அதுக்கப்புறம் 80ல இருந்து 150க்கு ஒரு காஸ்ட் இருக்கும். இந்த மாதிரி நான் மாத்தி மாத்தி போடணும். எப்படி சார் போடணும் சொல்றேன். So now they have given you the debt to equity ratio is 2:1. So அந்த ரேஷியோல தான் நான் போட போறேன். So KD is 10% up to 80 lakhs into 1 minus tax. So 7.5%. KE டைரக்டா கொடுத்துட்டாங்க 12.5%. So cost of equity என்ன? 10 into 0.67. Sorry, 7.5 into 0.67. Okay, 7.5 into 0.67 plus 12.5 into 0.33. Weighted average cost of capital calculate பண்றேன். So 9.167. So 80 lakhs க்கு எவ்வளோ காஸ்ட் இருக்கும்? 80 lakhs into 9.167, 7.334 lakhs. 80ல இருந்து 150, அதாவது 70 lakhsக்கு once again 11.5 into 1 minus 0.25, 8.625. K is 13.5. Weighted average cost of capital is 10.25. 150 minus 80 is 70 lakhs. So 70 lakhs into 10.25%, 7.175 lakhs. 150ல இருந்து 250 lakhs வரைக்கும். It is 12% into 1 minus 0.25, 9. Equity is 14. So cost of overall capital is 10.667. Weighted average cost of capital. ஆனா 250 minus 115 போடக்கூடாது. எவ்வளவுதான் போடணும்? 194.0605 minus 150, which is 44.0605 into 10.667 gives you 4.7 lakhs. இப்போ இது மூணுத்தையும் ஆட் பண்ணா 19.209 lakhs. 19.209 divided by 194.0605 gives you 9.90 as the overall cost of capital. With that, fourth requirement is over. Since overall cost of capital is below 10%, somewhere limited is eligible for revenue subsidy. Evlo revenue subsidy? GP into 15%. GP is 21.6 into 15%. Annually, they will be getting 3.24 lakhs as a subsidy from the government. With this, case scenario number 9 is over. Let us move to the last case scenario that we are going to solve for today. Twigato Limited is an all-equity financed company in the food delivery business and is considering an expansion into quick grocery delivery. It is the market leader in the current food delivery business with a valuation of 5750 crores. From the discussion in the recent fundraising meeting with the venture capitalists, it has been noted that the quick delivery business is expected to run for 6 years, after which it will be sold to another entity with a target valuation of 2 times of the investment made. The new segment will be funded by debt, preference, and equity in the ratio of 3:2:5. The quick grocery delivery would require 30 crores of investment to start, and subsequently it will require an additional infusion of 20 crores in the start of year 2, 25 crores of fund infusion in the start of year 4. The operating finances of the business is expected to be on the following lines. Number of orders per day, 1,000. Number of overnight orders, 2,000. Ticket sizes, 5,000 orders below 500. 3,000 orders between 500 and 1,000, and 2,000 orders above 1,000, with average ticket size being 700 per order. Delivery charges are applicable for orders below rupees 500 at rupees 40 flat per order. The company would charge 5% of the invoice value from the seller of the delivery products and 7% in case of overnight delivery. Overnight delivery should be available only to subscription-based customers, which is at 5,000 per annum. Each overnight order is expected to be having an average size of 750. Each subscription-based customer is expected to place order every alternative day on an average. The quantity of orders expected to be grow at the rate of 20, 15, 10, and 5 for the first 4 years of operations. Beyond this, it is going to be constant. To attract prospective customers, it is likely to spend heavily on advertising in the initial years. The advertising and promotional activities would cost 7 crores, 8 crores, 10 crores in year 1, 2, and 3 respectively. Remuneration will be 15,000 per month for all the delivery partners plus 20 per delivery. Each delivery partner can deliver on an average 30 orders per day. An additional provision of 50% of extra delivery partners is to be made to consider unexpected spike in orders. The IT infrastructure and customer care expenses would amount to 8 crores each year. Income tax allows 20% depreciation on SLM basis for fresh investments. Applicable tax rate is 25. After tax cost of debt, preference shares and equity shares will be 10, 11, and 15. Assume 365 days in a year, which is the best discounting rate for the project. What is the best measure of delivery partners required in year 1? What is the best measure of total revenue in year 3? Which of the years represents the years of loss? Which of the following is the best measure of NPV? So my discounting factor should be my overall cost of capital. My cost of capital is nothing but weighted average cost of capital. 3:2:5 ratio 12.7 is going to be my best option. பாக்கி எல்லாத்துக்குமே we need a working. So number of quick deliveries per day, it is going to start at 10,000 and increase every year. எவ்வளோ இன்க்ரீஸ் ஆக போகிறது அதுவும் அவனே கொடுத்துட்டான்ப்பா, நீங்கள் எதுவுமே போட வேண்டாம், நீங்கள் எதுவுமே இமேஜின்லாம் பண்ணிக்க வேண்டாம். 20, 15, 10 and 5% respectively. அதுக்கப்புறம் it is going to be constant. So 15,939 ரீச் ஆயிடுச்சுன்னா 6th year எவ்வளோ தான் இருக்கும், அதே 15,939 தான் இருக்கும். Number of overnight deliveries will also increase. 2,000, 2,400, 2,760, 3,188 ரீச் ஆயிட்டு அதே 3,188ல ரீச் ஆயிடும். So this is per day. Per annum எவ்வளோ இருக்கும், into 365, இதுவும் into 365. So this basically means these are the total number of deliveries. இதுல out of the total 10,000 deliveries per day, 5,000 are below 500, correct? Which is basically 50%. These 50% are chargeable. Enna chargeable? Each delivery will be charged 40 rupees. So chargeable quick deliveries evlo 3650 into 50%, 4380 into 50%, 5037 into 50%, so on and so forth. Number of delivery partners evlo irukka poranga, A plus B. Number of deliveries will be 10,000 plus 2,000, 12,000 deliveries divided by 30. So ஒரு நாளைக்கு எவ்வளோ delivery இருக்கும், 12,000 divided by 30. 12,000 is for 1 month. So ஒரு நாளைக்கு 400 deliveries இருக்கும். நான் எவ்வளோ ஆள் வச்சுக்க போறேன், 400 into 1.5, 600 இருக்கும், 720, so on and so forth. So now what is the cash flow after tax? From quick deliveries எனக்கு எவ்வளோ வர போகிறது, 40 rupees ஃபிளாட்டா டெலிவரி ஃபீ அப்படின்னு ஒரு அமௌண்ட்டை கலெக்ட் பண்ண போறேன். அதை டைரக்டா போட்டுருவேன். எங்க இருந்து, இந்த சார்ஜபிள் குவிக் டெலிவரிஸ்னு இருக்குல்ல, திஸ் ஷுட் பி மல்டிப்ளைடு பை 40. நெக்ஸ்ட் குவிக் டெலிவரி செல்லர் கமிஷன். அது என்ன, இந்த 36,50,000க்கும் எனக்கு என்ன கிடைக்க போறது, 700 rupees is my average ticket size. 5% is going to be my dealer commission. So அந்த கமிஷன் எனக்கு 5% வந்துடும். இதை தவிர இந்த பி, அதாவது ஓவர் நைட் சப்ஸ்கிரிப்ஷன் வாங்குறாங்கல்ல, இவங்க எவ்ரி ஆல்டர்னேட்டிவ் டே புக் ஆர்டர் பண்ண போறாங்கன்னு சொல்றேன். ஸோ பி பை 2, 2000 ஆர்டர் இருந்தா கூட 1000 கஸ்டமர் தான் இருக்காங்க. ஏன்னா எவ்ரி 2 days ஒரே ஆள் ஆர்டர் பண்ணுவான். ஸோ பி பை 2 into 5,000 rupees is the annual revenue. So B by 2 into 5,000 gives me overnight delivery subscription length எவ்வளவு வரும் அப்படின்னு சொல்லிட்டு. Overnight delivery seller commission. இது என்ன? நான் இங்க இந்த டீல இருந்து எனக்கு என்ன ஓவர்நைட் டெலிவரியில இருந்து எனக்கு எவ்வளவு கமிஷன் வரும்? 750 rupees is my average ticket size. 7% is my commission. So that will give me these amounts. Total revenue is these many. Advertising அவங்க கொடுத்திருக்காங்க, IT and customer care அவங்க கொடுத்திருக்காங்க. Delivery partner salary, number of partners into 15,000. Delivery partner commission எவ்வளவு ஆர்டர்ஸ் இருக்கு? 3650 plus 7,30,000, 4380 plus 8,76,000, 5037 plus 10,07,400. இது எல்லாத்தையும் ஆட் பண்ணா ஒவ்வொரு ஆர்டருக்கும் 20 ரூபாய் கமிஷன் உண்டு. அதையும் போட்டாச்சு. டெப்ரிசியேஷன் எல்லா வருஷத்துலயும் 6666. செகண்ட் இயர்ல எக்ஸ்ட்ராவா இன்வெஸ்ட் பண்ணுவேன், ஸோ 4 ஆகும். ஃபோர்த் இயர்லயும் எக்ஸ்ட்ராவா இன்ஃபியூஸ் பண்ணுவேன், அது ஒரு 3 years வரும், 555. ஸோ திஸ் will give me the total cost. I can arrive at PBT. PBTல எனக்கு என்ன தெரியாது? 1, 2, 3, 4 years are lost years. Tax is a benefit in these years. I will add it back. My depreciation is 6 crores, 10 crores, etc. So my cash flow after tax is 1.31. எல்லா இயர்லயுமே it is positive. NPV என்ன? Investment is 30 crores in year 1 at 1% value factor, 30 crores. 20 crores at the start of year, at the end of year 1, which is start of year 2, 0.89, 17.75. 25 crores at the end of year 3, start of year 4, 0.7, 17.46. Cash flow after tax எனக்கு வந்துட்டே இருக்கு each year. So my net present value will be 39.35. So இதை பேஸ் பண்ணி நீங்க எல்லா ஆன்சருமே எழுதிடலாம். என்னெல்லாம் கேட்டிருக்காங்க? நம்பர் ஆஃப் டெலிவரி பார்ட்னர்ஸ் ரெக்வயர்ட் இன் இயர் 1 is 600. இயர் 3ல இருக்கிற ரெவென்யூ எவ்வளோ? 33.63, which is close to 33.66. 68 நம்ம போட்டிருக்கோம், 66. Years of loss, year 1, 2, 3 and 4. NPV of the project is 39.35 crores. That is my NPV. With this, case scenario number 10 is also over. I know that I have rushed a little in case scenario number 9 and 10. But of course, if you have any doubts, you can post comments on this video so that I can cover it maybe in a later video, or you can always reach out to the FOCAS team and they'll be giving you the contact details of me if you have any doubts, wherein you can reach out to me and sort your doubts out. Yes, with this, we'll wrap up case scenario booklet up to case scenario number 10. From case scenario number 11, let us cover in the next video. Happy studying. Take care. Be safe. Yes. Bye. See you later.